Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back and welcome to Traders Corner. And because we do enjoy a birthday celebration, we bring you another special half-hour edition of the show tonight. And this evening we'll look back at trades that scored and those that hurt over the past 5 years that this show has been running. As we did last week, the first segment will focus on our 2014 portfolio. And as always, Traders Corner founder and editor Garth McKenzie joins us in studio. Garth, nice to have you.
Yeah, thanks. Nice to be here.
Now, Garth, before we review the current status of our portfolio, you've consistently said it's a good idea to trade gold shares, but not necessarily to hold them over a long-term period. So let's go back to the second trade of our show ever, back in 2009. It'll give you some clues as to that theory. So a little bit of time travel back to the 25th of August 2009.
I bought some shares at 290 Rand today, and I'll be looking at a stop loss there of 276. Now 276 is below the bottom of that triangular pattern, and I'll look for a daily close below 276 to execute a stop loss on this one. Initially, I would look for a rally up to about 315 Rand, where there's a whole bunch of top formations there. But ultimately, I'd like to see the stock break through that top trend line and then ultimately move up, and that could be a very bullish break. But for the time being, let's focus on 315 as the initial target, and then we'll assess it when we get there. We might look to hold, or we might look to cut it.
So that was Anglo Gold Ashanti, if only 315 Rand were the target at the moment. Garth, it is one of the trades that you've put on recently, the portfolio. I can't remember how it worked out back in 2009, but unfortunately this year hasn't been so great.
No, it hasn't. I mean, we've actually traded Anglo Gold twice this year, and now on both occasions we've lost. I know in the past we have made money out of trading this stock, but this year certainly it's been my nemesis. And once again, unfortunately, this week I've got bad news. We've had to be stopped out yet again on an Anglo Gold trade.
Okay, so tell us what exactly happened there.
All right, well, we went into the trade, if you look at the chart that's on the screen now, we went into this trade in late July. And what I'd identified here was, first of all, that we had this nice steady upward trend which was being tested. The stock was quite oversold. And what I also thought I saw there, what I did see, was an inverted head and shoulders pattern. And typically these things are quite bullish, and they usually will break to the upside. What I was a little bit naughty with here, though, was that I actually went in and I bought ahead of the breakout through the neckline of that pattern. Now, strictly speaking, I should probably have waited for a break above that 196 Rand level where the neckline of the pattern is. But I felt that I was getting a better risk to reward ratio by buying it off this upward trend, and given that it was oversold and whatnot. And to be fair, it did get off to a fairly good start, and we looked good for the first week or so. But unfortunately, what's happened subsequently is it's dribbled lower, and it's actually now gone below that upward trend of the last, that goes back to December really. So unfortunately, I've been stopped out of that trade now at 179 Rand, and we will obviously now wait and see what happens. But also what's unfortunate is that we took our maximum risk on this trade, being 2% of our total capital value, and that means that we've lost 2% plus all of our costs. So we're down 8,500 Rand on this trade, unfortunately. And what's a bit irritating is that it does look as if it might be reversing back up today, but I don't know. It's really way too early to say that for now. I think the big thing is you've got to stick to your stop losses. Yeah.
Interestingly enough, I mean, Anglo Gold looks like a fantastic performer from the beginning of the year, and that was one of the reasons partially that we went into the trade. But just look at the price. I mean, stopped out at 179 Rand. Back in 2009, you were buying it, I think, at about 295 with a stop loss of 276. So over a long-term basis, the gold shares have been a bit of a horror show. Yeah,
gold shares are for trading; they're not for investing in. And I can give you multiple reasons why that is the case. Yeah. But the big reason, as you can see, is that 5 years ago, the share price was nearly double what it is now. That's not a great investment by any means. But there's lots of volatility within the gold shares that do make them quite attractive as trading stocks.
Yeah, just very unfortunate that it's gone against us. And another stock that started off working out really well was PSG, and that also seems to have turned sour.
Yeah, it has, and I've closed this trade out. If we go back and have a look, we did this trade in early July. And if you have a look, there's a nice steady upward trend over there, and you can see that the stock pulled back to that trend line, and each time it's found strong support. And again, recently we had nice strong lateral support there, which came in at just above 90 Rand. So we went along and we bought the stock. We bought 2,500 CFDs for the portfolio at 93 Rand 20. You'll notice I've circled the volume spike over there as well. That volume spike was quite interesting. It was actually caused by, well, lots of buying by Yanni Motan. He bought 47 million rands worth of his stock on a single day. That's what caused that big volume spike. And we thought, well, you know what, if Yanni's buying it, we're going to
we're going to back the man.
We're going to back the man. And it got off to a great start.
Yeah.
Unfortunately, what's happened, though, is that the share price seems to have kind of rolled over. And I think my strategy here was probably wrong in that I felt that this was one we should look to hold for a good couple of months. And in retrospect, that was probably a mistake. The share price has come off a bit now. And I think part of what's caused this is that there's been a lot of obviously we know the African bank debacle, and there's been a little bit of negative press around Capitec and what have you. Whether that is unfounded or not, we don't really know. I suspect it could be, but anyway, be that as it may, that weakness that we've seen in the share price of Capitec has weighed on the bigger PSG group as well. And what I decided to do is just to actually close this trade out now. We've made 2,300 Rand on it after costs are taken into consideration. It's a far cry from what we did have. I think at one stage we were up about 15,000 Rand on this trade. So it's a great disappointment to see the profit that we had being withered away so much. But okay, I guess again, a case of hindsight is always an exact science.
Yeah, and also the time value of this trade. This is so this is to some extent why it's a trading show, not an investing show. And it would have cost you a little bit more, wouldn't it?
Yeah.
Because you were in the trades for the length of time you were.
Yes. Look, your CFD funding cost running at about 8.5% per annum now. So it's not a massive amount of interest to pay, but it does add up over time.
Yeah.
And a trade like this that we've held for about 7 or 8 weeks, you end up actually paying a fair amount of that away as financing costs over the time.
I'm sure Frans de Klerk would see a looming head and shoulders formation there. Garth, okay, so 2 trades that unfortunately have gone against the portfolio to mar what has been otherwise a pretty good year so far. So what are you looking at the moment? Have you put anything new on for the portfolio?
I haven't. We're actually very light in the portfolio at the moment. You'll see when we look at the overall portfolio now. We've only actually got our bearish option structure in place. I'm not doing any new trades for this week. I want to just highlight, though, why I'm cautious at the moment on the market. It has been a rather difficult 2 months. I think any trader out there will agree. But I want to focus first of all on the DAX, the German market, and then look at our top 40.
Okay.
And if you have a look at the chart of the DAX, what's quite interesting here, I mean, this is actually, to me, this is sounding all kinds of alarm bells. That upward trend that I've shown over there has been broken to the downside. That trend actually goes back a lot further than what I've got it on this graph. It goes back all the way to 2010. So that's like a 4-year upward trend that's currently being broken at the moment. You can see the stock's broken down. It's now rallying back up to retest the underside of where it broke down recently. It did find a bit of support at 8,900, and we've seen it bounce up off that level. There's more support, quite strong support down at 8,500. But now what I'm seeing here, this whole pattern to me is looking very much like you could call that a rising wedge or a bear flag pattern potentially. And these things usually are continuation patterns within a trend. And if you assume that this is a downtrend now, which I think it's fair to say that it is, that the likelihood is that we're going to see that pattern break to the downside. And that will then most likely take us back to this recent low at 8,900. But strictly speaking, it could actually take us even lower. It could take us down to 8,500. So if that is the case, then I think we've got to be quite careful, generally speaking. Your stochastic here is also quite overbought, and we're actually seeing what's called negative reverse divergence here. So there's all kinds of warning bells for me. One other thing about the DAX is that it was actually the index that led the markets lower in 2007, 2008. The DAX was the index that broke its uptrend, the first out of all the major global stock market indices in 2007. Now, I'm not saying that's going to happen again. I'm really not, because I simply don't know. But I find it quite interesting that this DAX chart has been rolling over, and that to me looks like throughout 2014 we've actually seen the formation of a massive big topping structure, which doesn't really bode well for the future, I don't think.
What though if Mario Draghi and co announce some form of quantitative easing, which is now the expectation?
Well, that is the one potential thing that could unravel this argument of mine. If he does announce something really drastic, it could maybe stimulate these markets a bit higher. But it remains to be seen whether that comes to fruition or not. It's quite an interesting time that we're at now as well, because it's also where the US Fed is going to withdraw their stimulus, most likely in October, and we're going to potentially have some Eurozone stimulus taking over, but will it be sufficient to replace what we've been getting out of the US and so on? So it's not quite cut and dried, I don't think.
Before we look at our own market, Garth, do you feel it's instrumental to look, because I suppose, and we ourselves tend to focus a lot in the American market, so in the S&P 500, and then we bring it back to the South African market. Do you find it helpful to cast an eye over the DAX, the FTSE, the CAC 40? I
do, I certainly do, and I think especially the DAX, because that's the leading market in the Eurozone, and that's the DAX represents the biggest economy in Europe. So I do think from that point of view it is quite important to look at it.
Okay, so what then do you see developing on the top 40?
All right, well, this is a chart of the top 40 futures now, and it's a daily chart, so each plotting here represents 1 day worth of trade. It goes back 1 year, so that's July last year over there, and you can see we've got a very nice tidy upward trend that has been in place over the last year. Now, we haven't been down to test that uptrend yet recently. That comes in at around about 45,000, and what's also quite interesting to note is that we've got this channel which has developed over the last 2 months or so, and we're seeing the bottom of that channel also come in at around about 45,000. And then the last thing that I think is very interesting on this chart is that there's lots and lots of optionality at 45,000 on the top 40, and I'm talking specifically on the September futures contract here. There's at least 3.5 billion rands worth of put options that have been written at 45,000, and the futures closeout for September is now less than a month away. So if we do see any selling, it's quite possible that we could actually see some accelerated selling into that 45,000 area if those options positions need to be hedged. So I think that's going to be very key to watch in the weeks ahead, and I've got a sneaky feeling we could well be back visiting 45,000 again before the end of this futures closeout period. So
essentially no trades at the moment, given a slightly worrying set of factors that you see.
No new trades. And the thing is, we are positioned for this. If you look at the portfolio, I mean, the only trade that we've got on right now is this option structure, which runs out to the September futures closeout, and that will work for us if the market starts to drift lower. Other than that, we've closed out all of our other trades. We've got no long positions on at the moment at all right now. And our portfolio is still sitting up 32% for the year to date. We've got 331,000 rand in the account. It's unfortunately pulled back quite a lot. I think we're down about 20,000 rand over the last 3 weeks or so, which is a great pity. But I think for the year to date, by and large, still a fairly good performance, and we've still got 4 more months of trading left to try and pull it right again.
To try and make that back. But I suppose and psychology always comes into it. So I suppose at this point, you don't really want to blot your copybook anymore, having lost about 20,000 rand, as you say.
No, that's it. But the thing is, you can't stop trading. You've got to keep looking for the opportunities. And when you see a high probability opportunity, you've got to take it.
Yeah.
Because otherwise, you don't catch a fish if you don't put your line in the water.
Indeed. Garth, so up 32.5% for the year. And to end off this segment of the show, just remind us what one can still cash in on, given that it's our 5th birthday.
Yeah, so for the Traders Corner 5th birthday, I'm still running a promotion on the traderscorner.co.za subscription. You can now get a 1-month subscription for 149 Rand. That's half the normal price that you would pay. This is the final week of that. We're only running it till the end of August, and then prices will revert back to normal. So if you haven't yet, come along, subscribe. You can get access to all the analysis that we present. Everything you see on this TV show and a hell of a lot more is what we show on the website. And then also in terms of the trading courses that I run, high probability trading courses, I've got 4 of those coming up in September now. And here also discounted rate, you save 1,000 Rand off the normal price because this is our 5th birthday promotion. You can see the dates there: Joburg, Cape Town, Durban. If you're interested in attending any of these courses, please email me, garth@traderscorner.co.za, and I'll send you the details.
Okay, great. Garth, we'll leave it there for the moment. We will be back after the break with round 2 of Traders Corner, and part of our 5th birthday celebrations will be looking back at the last 5 years, so do stay with us.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.